Good day. So we are going to be talking about Forex, and today we'll be looking at introduction to foreign exchange, that is Forex trading. So I'll just get right into it. The foreign exchange is a global market in which the currency of a nation is exchanged for that of another nation at a mutually agreed rate. That is, it is a decentralized network that allows individuals, institutions, and businesses. Forex trading is decentralized. So the forex market is open 24 hours a day in 5 days a week. That is, it's open 24 hours in Monday, Tuesday, Wednesday, Thursday, and Friday. So during weekends, they actually close the market. The market is usually closed. So currencies are being traded worldwide in four major time zones, and those four major time zones are, let me list them. Those four major time zones are, let me just help you translate it. London session, London session, New York session, um, Sydney session, and Tokyo session. So these are the four sessions you have in the forex market. These are the four sessions you have in the forex market: the London session, New York session, Sydney session, and the Tokyo session. Now, forex market is the largest market in the whole wide world. Why? Because they have like a lot of volume coming into the market every day. Up to $5 trillion are being traded in the forex market every day. $5 trillion. Now the entire stock market is about $0.25 trillion in trading volume, but the forex market alone, that is for the stock market though, but the forex market is $6.6 trillion and above, sometimes even $7 trillion a day. So that makes foreign exchange being the biggest, I mean, they are the biggest traded um exchange worldwide. So if you summarize everything, I'll just tell you, forex trading is simply the act of buying money and waiting for the sell. Sorry, I'm waiting for the shift in an exchange, then selling it back to the market, ideally for profit. There are various amount of strategies so many people use on FS, like expert advisors. There's different strategies: expert advisors, technical analysis, retail, bots, indicator, fundamental analysis, and so on. So forex simply means foreign exchange, and it is mutually agreed exchange of a currency or a decentralized network. So the volatility of forex is what makes it attractive. Yeah. So forex has to do with trading via an electronic network of dealers, brokers, and bankers. The FX market opens at Sydney, then moves to Tokyo, then to London, then to New York. That is where the market closes and the cycle continues as it goes back to London, New York, Sydney, Tokyo, London, New York, Sydney, Tokyo, and so on. And the two major sessions with the highest volatility, like where the market is being traded more, is usually the London session and the New York session, is because lots of exchanges are going on in this session. So that is all. That's just like the introduction to foreign exchange. Yet now we'll talk about quote and base currency. Quote and base currency. Hmm. Talk about quote and base currency. So let me remove this for me. quote and base currency. So this is what we're going to be talking about now. Quote and base currency. You have currency pairs like Euro USD, GBP USD, NZD USD, AUD USD, and so on. So a currency pair is a quotation of the relative value of a currency against the unit of another currency. I'll go again. A currency pair is a quotation of the relative value of a currency against the unit of another currency. So every single currency is quoted in pairs because we use the pairs to indicate the price. So now, for instance, if we are saying Euro USD, we are seeing Euro USD. Where's my brush? Yeah. If you are seeing Euro USD, we are seeing Euro. If you are saying, we'll ask it as Euro USD. So if you are saying this now is 1.3, sorry, 1.3035. If this is the value of Euro now, this is the value of Euro now, and you are saying that Euro USD now is currently at 1.3035. So that means you are actually saying that 1 euro is 1.3035 USD. Again, that means if you want to buy 1 euro, you have to buy it for 1.3035 USD. So the quote currency is what gives the base currency its price. So now let me show you what I mean. If we say something like this, if you have something like this, you have something like this, euro slash USD. So now euro came first. So euro now, the first one, that is this first one now, is the base currency, while USD is the quote currency. So if you are saying euro USD is 1.035, that means 1 euro is equals to 1.035 US dollar. So using an analogy, let's say euro USD is up 2%. This basically means that euro is pumping and USD is dumping. So when euro is buying or increasing in value, USD will be decreasing in value. So when a currency pair is pumping, that means that the base currency is pumping, that is the first one, and the quote currency is dumping. You get? So now no single pair has a stand on its own. So you cannot just say you're trading Great Britain. No, it's usually paired with something, either GBP USD, Euro USD, Euro JPY, GBP JPY, and so on. So we have 8 major currencies in the world. We have the USD, we have the Euro, we have the Japanese yen, we have the Great Britain pounds, we have the Australian dollar, we have the Canadian dollar, we have the Swiss franc, that is the CHF, and we have the New Zealand dollar. You get? So sometimes the first two letters represent the currency, represent the country, and the last letter represent the currency. What do I mean by that? What do I mean by that? Now let's say for instance now we have um we have we have Great Britain pounds. Great Britain is actually the name of the country. You get? So Great Britain. Then we now have the currency which is pounds. Great Britain um pounds. So like I said, usually the first two letters are usually the currency. So now we have then GBP. GBP, now the GB in that place is the Great Britain, then the P is the pounds. In a case like Japanese yen, The JP is the Japanese, while the is the Y is the yen. We have something like Euro USD, Euro USD. You get, so Euro is usually like a country name for you yeah, for I think for Europe, people that are based in the Europe area, yeah, they use Euro mostly. Then we have the AUD, that is Australian dollar, so and so on and so forth. So we have major pairs, we have exotic pairs, and we have minor pairs. So exotic pairs has low volatility and high cost of trading, and high cost of trading. So it is like best to keep away from them. Exotic pairs are like USD HKD, USD SGD, USD ZAR, USD THB, USD MXN, and so on. Then we have major pairs. Major pairs are they are like they have low operational costs and huge volumes. That is the ones we know: Euro USD, GBP USD, USD CHF, USD JPY, and so on and so forth. Then we have minor pairs. Minor pairs have a reasonable amount of volume as there are significant activities going on in them. Example: Euro GBP, GBP JPY, GBP CHF, GBP AUD, Euro JPY, and so on and so forth. So yeah, this is basically the introduction to Forex. So yeah, I'll see you in the next one.